I'm mad I had this chart since like probably 8 months ago. I don't know, but I've got so many charts, it got lost within my charts. Anyway, long-term supports. So let me look at a 3-day chart with these drawings. So this is a 2020 crash right here. It's been pretty on point. You see this very bottom support and all these other resistance levels, which were, well, they were resistance levels and other supports. They became supports. As you see, here it is, these supports. So yes, this could be a bounce. It could just be a big ass bounce, just like these other supports were. This was also a support, a potential reversal support, which I remember I thought this was going to be the stock market reversal. And yeah, so I was telling everybody, including myself, to buy around this time, around mid to late June, which it was a very big bounce, but the market's so trash, it failed. And it got lower, which it's just following intraday trends to where it gets lower than the actual support. So this was in a good economy, this would be the support right here where it would have reversed, but instead it came down here, which somehow I had it marked like 8 months ago. Anyway, can't remember how. Like I said, beautiful pattern, right? See this pink and blue? So this pink and blue came all the way from back here. So this was a big resistance. This was the crash bottom in 2020, and this was the big resistance right here. Look on a 1-day chart. Okay, so this was these lines right here, this pink and blue. This was a huge resistance, so it got past that. As you can see, big old wick got past it. Once it got past that resistance, at this resistance, the market could have crashed again from the previous crash support, which was like 218. It could have went to like 205 next from there, but it got past anyway. So then it had a huge squeeze. I believe this was a record squeeze. I'm not sure. At the time, it's probably record squeeze. And also the main support on the market, I mean right now, back then was also a huge resistance. It was the first huge resistance. 3 patterns, 3 tops, three sideways tops, and a double top. 1 top, 2 top, 3 top, then 4 double top right here. So right here, this was also a huge resistance. It could have crashed again, could have went to around 205. Previous lows were 218.26, which that's what it's probably lower than that. This, according to daily chart, it's 218.26. It's probably like, I don't know, it could be $1 lower, it could be 50 cents lower. Anyway, so as you can see, they're still getting past the resistance levels of this line, which that happens, especially when there's big wicks. When there's big wicks, like seeing this right here, you see the square, it got past the line. That right there should have been an indicator right there that the market would make higher highs opposed to crashing this square right here, because this square got past the line. And you see now it's just wicks. It's just a wick getting past the line, and right here also a wick getting past the line, big wick and drop, and what do you know, turn to a support. And this is the support that bounced off very hard. This is the support we're currently at, and looky here, I mean, this is where we're at right now. It's 9:31 a.m. January 6, 2022. I mean 2023. Damn, 2023. All right, so like I said, this right here, huge bounce off the support, had a huge uptrend. How long did this uptrend last? 15 days. Went from 295, or really the low was 293.2 to 323.41. It's a lot. And here's where we're at now, the squeeze. So it previously bounced off this right here, and now we're at this level right here for the squeeze. So right here, it bounced off, and it's, let me show. Okay, so notice this line right here, and these lines right here, the same as this line right here and these lines right here. So it bounced off this line, also known as this line. This is where the market pretty much reversed. This was a head and shoulders, it looks like. Maybe it was just a flag pattern, also head and shoulders on a smaller chart. So that started the new trend for the bull markets in 2020. This was May 26. This is around May 2020, May all the way to June. So now right here, big resistance. The wick got past it, which is normal, no big deal. That happens. Doesn't mean it's gonna, sometimes it can mean, the wicks are very tricky. I mean, sometimes you can consider them, sometimes you shouldn't, sometimes you can, sometimes you can't consider them. It just depends. It just makes it all the more confusing with technical analysis. That's why I prefer day trading instead of taking long positions. Anyway, so the wick got past the resistance levels, which is pretty common even in bearish patterns. Like, this happens all the time. Wicks often get past resistance levels like right here, and they still crash. It still drops, not necessarily crashes, but in this case it did not. As you see, it came up right here to the resistance, pretty strong resistance, the pink And after that, after it got past that, it flew the next resistance. Okay, so very bottom, and here's the pink again, right up here. Oh, what do you know, back here, see right there, got right below it, a big wick got below it. Same with support also, the wicks can get below it, long as the square doesn't. The square can get a little bit below it sometimes, but preferably not. But anyway, so like I said, there it is, bounced off a very hard bounce, and it failed. That's where it could have reversed. I remember this is where I thought the market was going to reverse. Like I said earlier, I thought it'd be getting all-time highs after, or at least testing all-time highs. Or no, in this level 360s, I thought it'd get all-time highs. Like I thought SPY would get to like 485 at least, then probably crash again. Then you get to around like 325, 320, potentially 275, 280. Anyway, bounced hard. Keep going. Hey, what do you know? It's a double. It's essentially a head and shoulders. Is this right here, right there, and this right there? So maybe not a head and shoulders, maybe so. Pretty much is, because if you consider back here, the bounce right here, a little micro trend, head and shoulders. Actually, let me see. Nah, can't really call it head and shoulders. This is just resistance. I guess it can be. I mean, a little micro, like on a 1 minute chart or 10-minute chart, this would be head and shoulders, but really it's resistance back here. Anyway, there's a 1, 2, 3, which see this got below, which that's okay because it got lower over here. It came off of this support down here, so it got below this line, which is fine because now it's a new trend so far. Like it bounced off of here, off the pink. Yes, the stick, the wick got below, but it's still, see, it's right on point. So like I said, it is January 6, 2023. And here we are, looky here, wick got below both, which that's the head, and here's a shoulder, and it's technically also a shoulder. And it's a strange pattern. On a bigger chart, it'd be like this would be the head right here, and here would be the head, and then this would be the shoulder right here. Like this is a 1 day chart. On like a 3 or 4 day chart, these two would be the head, this would be the shoulder, and we'd be at the shoulder right now. That's why it's bouncing right now so hard. So now it's just doing price action. Now, I mean, it's gonna either crash again, probably it'll fluctuate until around February, or no, to around January 18th, and then make the move, or it'd be at the bottom. It'd be at the bottom and then reverse, or it'd be at the top and then crash for another big move for options. So right now also, this resistance is also a big factor. And as you can see, hey, it's a good sign. Look, this square got past the line. I just noticed this. So here's this is a very important resistance right now, right here. And this square, the candle, not just the wick, the candle got past the resistance. But wait, this was before it hit the low, so it doesn't really matter that much. Although, because the pattern is following intraday patterns to where the support goes lower than the original support, it's confusing right now. The market's very confusing, but it's just following market psychology. So it could still indicate bullish. Oh, some insight. It can still indicate bullish, yeah. Yeah, I know. Very informative, yes. And right now, it is 9:43 a.m. Central Time. It's coming up on this resistance. It's the highest. Well, this was a big resistance after hours. This is just support resistance lines, and it looks like it's getting past. Well, it's on the brink of it. So anyway, I'm just saying this is a very powerful pattern. Head and shoulders, all perfect, great. Look, head, shoulder. Here's a shoulder, and here's a shoulder. The head on the very bottom support, that has to do with these back here. That is relevant to 2020. Here's the 2020 crash. Remember, it got past this resistance, had a huge squeeze, got past this resistance, and as you can see, it became support also for the new market. This line right here, probably see a lot better on a smaller chart, on like a 1 hour chart, for example, or like a 20-minute chart. It's even better, which they can't go back that far on TD Ameritrade, at least not on my account. Yeah, so this is a big ass head and shoulders on very important support levels. And right now we're at also hitting pretty big resistance levels. Obviously, this line right here is a very powerful resistance. Right here, resistance. Right here, as you see, it got past it, then it flew. But back here, it failed both times. You see, just the wick got past, not the candle. See, the wick, not the candle got past. If the candle got past, that'd be good, but only the wick got past. And this squeeze in the middle, I mean, it got past. It's just following the trend of the market. The market psychology and intraday trends have been a huge squeeze, like a squeeze that defies technical analysis, that defies It's just it's new in the market. It pretty much throws off robot trading and everybody who doesn't grow, who doesn't reinvent their strategies within the market. Then they're clueless, like, oh, why is it squeezing? It's just following the market psychology of intraday trends of huge squeezes. As you can see, intraday trends, huge squeeze. It's illustrated a lot better zoomed out. See, this squeeze went straight up, straight the F up. Then it came straight down. Then it went straight up again. It's been very common in 2022. Look at this. It's insane. It all began October 2021. Wait, was it 2020? Yeah. It all began October 2021. The squeezes off. So I remember over here, people thought the market was gonna crash, of course, like they do 4 or 5 times a year. And it was, what do you know, it was a head and shoulders, and it was huge. This is what started these squeezes, these monumental. Sorry, low-key trying to sound smart here, but these squeezes define the odds of people's technical analysis and strategies, and it's just reinventing the patterns and trends pretty much. Anyway, it all started here. It was supposed to crash here. Another crash, it was supposed to crash. It was another big liable area to crash at 450, around 450, 455. And then it came crashing down, and it had sideways triple top right here. 1, 2, and 3. And here's 4. Is there a double top anywhere? If you look back, yeah, there is. Yep, right here. This right here. This right here. And as you see, this right here. So that's where it could have crashed, but people who bought puts, hopefully it took most profit at the support. As you see, support, it got to 431, which support looks like 428, 429 was a good support. So hopefully they weren't waiting until like 430 or something to take support or to take profit. And then they, it bounced, record bounce is understatement. Anyway, this is the pattern that started the new patterns within the market, the squeeze patterns within intraday and within 2022. That's where it all began. So it would have really crashed here, the market. So either at important times in the market, probably like three times a year, it can crash or it's gonna squeeze. In this case, it squeezed very hard. So since it squeezed very hard, that means if it crashed, it would have crashed very hard. And what do you know? This record squeeze, this I know for a fact. I remember I looked at a video, Trading Fraternity, shout out Josh Answers. He's the one who said this was a record squeeze, like a record in the stock market. This whole shebang. Like, look at this. And what do you know, back here was a record drop, and eventually a record squeeze came. And as you see, very choppy. Currently we're at a very choppy, slow drop. So the next squeeze will be a very, probably another record squeeze. This will be like a squeeze like never before. Oh, people are gonna make a lot of money in the squeeze. If it is, I know I am. Lord willing. Oh, what do you know? I got past that resistance, which is not that big of a deal because as you see, this is the real resistance, but it did get past this right here. This intraday chart, this is the 1 minute chart. It's a pretty big resistance. Anyway, back to, so yeah, another, just like, okay, this is head and shoulders, right? Head, shoulder, right here, or in the middle of it, which it can potentially get lower. It can potentially get lower to follow the intraday trends. If it does get lower, it's gonna suck. It'll probably get to like 369 maybe. Yeah, 369. If it follows market psychology, that'll happen. But since this is such a strong pattern, it may just be straight up bullish. Just go straight up. May just go straight up. Similar to back here to October 2021. See, also a head and shoulders right here. It's head, shoulder, and also a very important support at the time right here. The wick got below it, no big deal. Wick got below it, no big deal. And right here also, dang, it's like 3 head and shoulders in one. Like here's a head and shoulder right here, shoulder, head, and then another head right here, and a shoulder, something like that. But there's like 2 or 3 head and shoulders in one. And that also contributed to the launch. Bam. Let me see if there's any of those, yeah, now that I'm looking at it, head and shoulder, within the head and shoulder, which is pretty common on a bigger chart. On the support though, yeah, wick got below, wick went all the way, cut through support, but the candle stayed above it. Good, very good, very bullish looking. He stayed above. You see this, it almost got below it, but it stayed right above the support. Damn, see the candle candle stayed right above the support, but the wick got below it. Amazing. And head, shoulder, which in this pattern, it gets, like I said, it gets lower. So this head and shoulder, yes, it was a squeeze, but then it drops lower to a lower support. That's just the market psychology and the intraday trends. So it translates to the bigger trends, or vice versa. Sometimes, a lot of times, actually a lot of times, it's that the intraday trends translate to, they kind of manifest into the bigger trends on bigger charts. Like the trends on 1 minute charts, they manifest into like the 4-hour charts, then the 1-day charts. Anyway, so this was original support right here, but to follow the trends of such a harsh drop, because back here at the crash, you see, this is when the crashes, the drops started. This is when the drop started, right? I'm not sure if that was a record drop, probably pretty close to it. So anyway, drop after drop right here, squeeze, very big squeeze, drop right here. Nice squeeze for, you know, swing trade, big old drop right there. What was my point? Oh yeah, I was just saying, this was the original support, but it got lower to follow the market psychology. That's all I'm saying. That's why right now, even if this is bullish, currently where we're at right now on SPY, it can still drop. Even though this is a perfect head and shoulders, it can still drop. It can still get to around the low currently, which, what day was this? Oh my gosh, it's 374.77 on 12/22. So yeah, it can still get to like 368, 369. Oh, look, right on it. Let's see if it gets past. I just noticed this. So now it's upside down head and shoulders, which is a bearish move. See, here's a shoulder, and 2 heads right here. But it's not that simple. Like, sure, there's that, but that's really like a day trade move. It takes a lot more analysis than that to say, oh, it's bearish. Like looking back at bigger charts, like a three day chart, for example. Although, like I said, never mind, I was gonna say it's very bullish, which that would make no sense, because that's upside down head and shoulders. Like right here, it's pretty much right here is also pretty much a upside down head and shoulders. You see, like here's a head right here, a shoulder and shoulder. But in my opinion, this is an artificial head. Like it shouldn't, like this is a real resistance right here. It just squeezed past it to follow market psychology. The huge ass squeezes that defy technical analysis, that defy robots programming and shit like that. Just like back here in October 2021, the very late October, this was the real, around 455, 460 was the real resistance. I remember that's when I bought. I mean, I didn't cut losses, I took profit. I think I took it before. I swing traded for like 2 weeks, but I could have, you know, made profit for a whole month, but I took profit anyway. So the original resistance was around 460, 455, but it squeezed past it. So up here's an artificial top right here. I'm just saying, this is also a moment when it changed the market psychology. The artificial tops, they get higher, they get past resistance levels, they get past the original technical analysis resistance levels. At least for long-term technical analysis, it still made sense, because I mean, I even bought the market crash. I have a video saying when it was gonna happen, and at 480 I bought like right at the very top. But unfortunately I bought her, I think back here around 477 or something like that, and then, you know, theta burned my butt for like a week or something like that. It looks like for like a week, probably took like a 40% loss. Then I cut losses, and then I just put it at the top, the very freaking top. Anyway, artificial top, this is when it started. And also the big old squeezes, as you see the pattern we're at right now. This is the pattern, which this was probably already an intraday. Yes, technically the pattern we're at. Anyway, like you can day trade this pattern right here, literally. See this pattern? At least you could for like 4 or 5 months. It's probably changed a bit. All right, so this whole pattern right here, this is a 1-day chart. You can day trade this pattern likely. So here's a 1-day chart. Let me go to a different charts. Let me go to a 2-hour chart. Okay, I'm at the 2-hour chart. Okay, so these patterns are all over, looks like, somewhat. Let me look up top. Somewhat similar. If I put a line, there's already a line, really, whatever this is from. So let's see, 1, 2, 3, 4 drops. So 4 tops, and what do you know, artificial tops right here. You see there's an artificial top. Now let me go back here. Now if I drew a line with like 470.8 or 7, 1. Okay, so 1, 2, 3. Would this be 4 right here? Hold on, I think I drew too high. Yeah, like 470 is good. All right, so 1, 2, 3, and 4. The drop, as you see, the artificial top right here made it get higher, but it was still a top. It's still a big resistance right around 70. It came down down at that squeeze candle right there, and this candle means it's gonna drop or it's gonna squeeze. In this case it squeezed then dropped. So let me go back to a 2-hour chart, pick another random. Okay, so I'm gonna zoom out. I'm gonna just zoom in over here. So it looks like these are around the tops, around 379. First of all, what is this? Is it 377.89? Just trying to figure out this top, which one I like. I do like 377.89. What's this? 377.59. I like 377.89. So I'm gonna draw a line. So 377.89, I put the value in the beginning and end. I filled them in to make it easier, and to make sure the line is straight. I'm gonna make this 7 instead of 6, a month away. All right, so 1 top, 2 top, 3 top, 4 top, and a squeeze. Like I said, this pattern right here, you can study this pattern and make trades based off that. Like this right here is a 2-hour chart, so obviously it'll be swing trades, which I hate swing trades because I do options. I prefer day trading, but anyway, yeah. So here, this pattern from November 2021, all the way till the crash, till January 12th to 15th. You see the top, the very top. So I'm gonna delete this. All right, back to whatever. I don't even know why I started this video, but okay, let's see where we're at. So this is a squeeze that we're at, right at the resistance, right at the top. 1, 2. Oh, let me go back all the way. Okay, so if you look at this pattern, I think I like 384. So 384.29. Or actually 384.12, because this 384.29 is a little bit higher because it's following trends, market psychology. So 384.12 would be more this is better to use. Even 383.53. I don't know, I'm gonna use 384.12. I'm gonna use them both. It's right now in the market. It's 10:15 a.m. January 6th Central Time. Squeeze got past the big resistance, at least for the past probably few days, I'm not sure, but now it is on as a support, which should probably get below it to follow market psychology trends. But this might be such a strong uptrend that it might just be a bull, like straight bullish for, I don't know, a month maybe. We'll see. Okay, ADHD kicked in a little bit. What was it doing? 384.12. Okay, so I'm gonna click on your mouse, you know, the thing that you use to scroll, like the thing you could press down. It's like a wheel between the 2 clickers in the middle. Anyway, I press that and I select this trend line, 384.12, and I click it, then I drag, then I click again, 384.12. Edit properties, you gotta right click it. Okay, so I go up to it, right click it, edit properties, and I edit the price, 34.12, and I'm gonna add at least 10 days. It's where the line stays straight. I'm gonna change the color to something wild, that way I know to delete it, save as defaults, so that way you'll see. And also liked 383.53. So it's saved as default, therefore it's the default line. You see the default color, 383.53. I could double click it, press Control C for control copy. Come over here, delete it, then we gotta hold Control, and now I'm gonna hold Control and press V to paste. Okay, now I got these. I kind of like them both. It's kind of weird. Okay, so resistance, this bottom one, the bottom pink one, is like the resistance before the squeeze, bam, and it was resistance here, or resistance here, and it's resistance here before the squeeze again. Back here it's a bit confusing. Right there, a middle resistance. Well, it was a support. It was the higher support, which this was the low support between the 2 tops. That's the higher price. Interesting. So I'm gonna consider that 1. Okay, so I'm gonna go back and count. Pretty sure it's like 4. So the bottom one. If I count this right here, which I'm not sure if I should count this back here. These new trends are new to me because I have not been day trading. I've been doing things away from my computer. The patterns and trends, they change every like 3 days. At least, I mean, the 1-minute chart and 3-minute chart and 5-minute chart, those change. It's a 2-hour chart, which this is pretty new. This pattern right here, as you can see, super choppy. This pure theta burn. Anyway, so I'm gonna say this is 1 right here, right? Sure, I'll call it 1. Should I call this 2 or so? 1, 2, 3. Right there I got 3, 4. That's 83.4. 5. So 5. So yeah, so the first one shouldn't have counted. because it starts to trend and it's not really a top, it's just a resistance or a support. So 5, so really it's 4. So good, that's great. So then the move and the bottoms 1, 2, 3, 4, 5, 6, which that's new. It's probably all over intraday patterns, which I'm pretty sure it is on like 1 minute charts. So how about this top right here? Let's see, let's call this 1, 2, 3, 4, 5, also 5. Okay, well it's 5 because I keep counting the very front back here, which you don't always do. In my case, I am. So 5. So if I didn't count the front, it'd be 4. And plus, sometimes it's not always 4. Sometimes it does change to 5 or 6, which sometimes it's only 2. Sometimes it's only 3. It's 2 or 3. Like in 2020, it was a bunch of double tops and triple tops before a move. Like see, this takes like 4 tops for a move. It'd be like 2 tops. It was such a bull market, so much head and shoulder patterns. What I will say is this at a scary resistance. Yeah, let's see. This is a paper trade account. Although I took these positions on my real account, these are long positions. Right now is a very important time in the market, in my opinion, based off the pattern and supports that I showed. And I bought me some Tesla because those are true lottos. Can be like times 60, times 80 profit. I mean, SPY can be going to like, I think like 460. Yeah, like 460, 460, 450, likely 460. Because, okay, just trying to fix this. Hold on. Oh shit. Well, this is paper trading. I have not been paying attention to it because today is important to paper trade. I took real trades. As you can see, it's negative 600. I guarantee you I'll make that up. I will make that up. It's only almost not even 11. Not even 11. Okay, so yeah, another reason why I think it's 460, 455. It's like I said back here when I was saying, so this is October 2021, or when it did reverse, this was a true resistance where it should have came down for, you know, for price action or market psychology. Instead, it started the squeeze pattern it's basically an artificial top. So the real top right here would have been, if it followed market psychology and all that, would have been around 455 to 460. So that's why my if this is very bullish, if this is a record squeeze that we got right now, ooh, even higher, that's good. If this is a record squeeze we got going on, what is this, January 6th 2023, then yeah, I think that'd be a pretty good resistance to take most or all profit. And I think it can get there. It's gonna sound ridiculous. Very realistically, late April, like April 20th, and lottery, it can get there in like a month. Which that'd be insane. Like I said, people can make a lot of money, which that is a straight up degenerate like thing to say. Yes, it is. But you know, I got some positions. I got some 420 positions. Wait, what positions do I got? Or no, I bought Tesla positions mainly. Yeah. Oops. Okay, that's why I so low took that SPY. Anyway, Tesla positions. Yeah, I got that February 17th, 2020 calls. February 17th, 250 calls. I wasn't gonna get to June 16th 550 calls, but instead I got a bunch of September 15th 550 calls. It can be life-changing money, but it'll probably you know, become worthless to options. No faith. As you can see, still very strong support. This is a 1 minute charts, which it could just be an artificial supports before it comes crashing down to around 376. Oh wait, was it 376? Yeah, around 376, potentially even 368. That's also possible. And why 368, you say? Since this was such a strong resistance. Okay, since this was such a strong resistance, this line, this is an artificial top, doesn't really count, but this line right here, strong resistance. If it comes down from here, it'll probably go to the next one, 372, then there's 368. So it'll probably bounce off 372. A good day trade. Maybe even swing trade, and then get to 368, unless this pattern, this beautiful pattern, starts a new trend within the market and stops this lower low support it's been going on all year 2022.